Hello everyone. So it's been a long weekend. Fastly? Yeah, I will. Maybe after the open, when I finish trading today, and more people can come in because when I try to share it before the open, but a lot of people come after I've already shared the entries, so I don't want to cover them again to repeat them again. Oil is now at the previous high around 120 level. Looks like it's building a cup with handle type of pattern and refused to go down. At the same time, this 120 level is definitely a really huge resistance level. That could be a level that can build a double top for this move here, because I'm not going to play the long side on oil here. So what I'm now focusing is on the short side, the potential reversal. And one thing that caught my attention are cryptos. So I talked about it last week. I want the crypto to stay above the 9 and 21 EMA, which Bitcoin and Ethereum did, especially on Sunday. This little shakeouts to the downside and a fast reclaim close above the EMAs. So that will be my main focus today, the cryptos names. So when you look at cryptos back in 2022, so after a long downtrend, the first one is right here on October. So it closed above the 921 and found support. So the first retest, and then it followed through to the upside, but it just lasted for 2 weeks and then it falls right back. And then on January 2023, this is the first close above the 9 EMA, and then the second close, and then the breakouts, and followed by a pullback into the 9 and 21 EMA on this day right here, and then it found support, continue a straight move to the upside. And if you missed the early stage of the uptrend, like the first few days after they close above the EMAs, probably you won't get an entry afterwards, because they tend to snap up very fast. And we saw a lot of these straight up moves in 2025 last year. Like a lot of the names are just going straight up, not pulling back. So Bitcoin also did a similar thing, close above the 9 EMA and then the close above the 21 with a pullback. Maybe not a pullback, but shakeouts. I think intraday this candle will look pretty bearish, but with a candle like this, but intraday and eventually snaps back, there will be a very strong sign of strength, which is, I think, similar to to the current situation. And I think nobody is bullish on the cryptos now, which is good. Nobody's talking about them. Everyone is talking about the inflation, the oil price, the war, even this stagflation. So I think it will be a good time. It's a good timing to find some to look at the crypto trades. And again, I think today for other individual names, so AOI and NAPS are I think SNDK2. But these stocks are the key stocks that I'm willing to get in, but I would like a pullback into the 9 EMA. And they say AOI is just, if you're following the setup, if you'd like to try to pick an entry that is really good looking, I don't think AOI would give you one. I kind of like the fade after the open. The MNR is the strongest one. Nice. I think that's it for today. Hopefully they're not coming back. Well, but I think I also missed Napiers and AOI. But AOI is just too extended that I think it's acceptable to miss this one. Napiers is actually, I think today's could be a really good entry. Pull back to the 9 EMA. But yeah, I think you can't catch all the opportunities. Here's the fade at the 21 EMA on the indices, which is okay because it may provide me another entry on AOI, and hopefully it won't stop me out on my position, especially Fastly. The three new crypto positions are around 25% each. I think maybe larger, maybe 27, but less than 30%, because the stops are really tight. And each I took around, I think around 0.3% risk per trade. maybe even smaller than 0.3%, because the entries are really great on this one. Hopefully they're gonna work. Looks like I'm going to get stopped out on Fastly. The intraday chart on AOI, like this candle is pretty tempting. Maybe I'll try a small position on AOI if it breaks out from this 1 minute range. This one is just a 1 minute entry with a really high chance of getting stopped out. But sometimes I think you have to grab your balls and just try it out. Daily chart definitely not looking good, or not an ideal entry timing. But if the market starts to build the low and try to at least bounce into the 50 EMA, I think AOI could be the real leader and continues ripping higher, because we saw a lot of examples last year and this year is the stock just went straight up with very little pullback. Maybe just a pullback into the 9 EMA, or maybe like riding the 9 EMA all the way up. So maybe I can talk a little bit about the Fastly entry. But I think the background of my 3 new positions, the Corning, Fastly, and Drip, which is the XOP short ETF, are actually the same. So on Thursday, the market gaps lower under the 9 EMA for around 2%, 1.75. So a gap down, especially a huge gap down, is definitely not a good time to short. So before the open, I'm not looking for any like short opportunities. And you can see like SPY, when it's just the open actually is at the previous lows, like it's building in head and reversed head and shoulders pattern. And one thing that I noticed is the relative strength of IWM, and that generally when IWM is outperforming, there will be a lower chance of a deep correction, like a correction more than 15%. And there are a lot of like individual names that are looking really well, such as the AOI that are. But AOI on Thursday is okay. Like it opens somewhere between the 21 and the 50, but the big picture, the weekly chart is looking really good. The pullback into the 9 weekly EMA, the weekly structure is still in an uptrend is still intact, and like you can see SNDK, etc. So there are definitely some green shoots in the market, could potentially become maybe not the new leaders, like I would say the existing leaders are still looking really good. Okay, I think I got stopped out on, not yet, but very close on AOI. Yeah, but yeah. And furthermore, my existing positions like Dell and Marvel are doing well. So they keep putting higher lows during the correction. So I took the trade feedbacks, and I think the long side has some potential because I've gained the positive feedbacks from my trades. So got stopped out on AOI. Hopefully there will be a pullback. Hopefully to the daily 9 EMA. And actually, like the one that is really on my radar is Corning. It opens at the anchor VWAP from this swing high and on the 21 EMA and on the unfilled gap. So this level is really a key level to me. And then at the open, it found support and shoots higher, then it pulls back, and then I enter it on the 5-minute breakout intraday. And Fastly is some of the not ordinary entries. This one is after the Corning trades, and I believe I probably enter it with the indices too. Like I think it's this candle, this one. So it's at when the Qs is breaking out from the height of day. And I think Fastly has the relative strength intraday. So intraday is it gaps lower into the previous highs. But this one is definitely not a really good structure. Not really good. It only have like 2 interactions before this prior swing high on F31. But the main reason were actually is that like Fastly, this stock doesn't give you a really ordinary entry. Generally, you have to buy on the pullback, and it's just riding in 9 EMA like 45 degrees higher. And if I think the market is like finding support here and may set up for the bounce or there will be more follow through. There will be follow through on the upside. Like a leader like Fastly would be a key, would be like have the potential to outperform the market on the at the next. You can say a bounce or maybe a bull market or a just an uptrend, like a long uptrend that lasts for several weeks to months. But this Luk is breaking out from this huge base, potentially setting up for stage 2. That's a really good sign. That's a really good thing. The strength, like the money is flowing into the speculative names. Yeah, for XOP shorts, like it's like the opposite of the longs, and I'm like trading it as the bounce into the, like I think probably the anchor free web on the swing high. But this move on XOP is actually a pretty huge move for this sector ETF, and I simply like believe this would be the like climax top on the oil. So if that's really the top here, then I think any pullback, like any gap up on the XOP ETF, like the oil and gas sector, would be a good spot to short. But definitely it could also, like if it found support on the rising 21, maybe build some higher lows here, it could potentially set up for the long side. But like we will never know. But the gap up into the declining angle view up is a gap up, and I just took the trade. And I think I talked about this trade on Wednesday. I think Corning Fastly and the XOP shorts is like I planned this trade a few days ago. So I'm just executing my plan. The Cornings, I didn't take the breakouts on Wednesday. I think I want to pull back into the 9 or the 21 EMA, and then it just gives me the chance on Thursday, and then I'm just following my plan. Nice. I really love the pullback of AOI. The market is not going down for now, for the first 30 minutes of the open. But definitely they are at the resistance. The IWM weekly is actually looking really good. Like the 9 is still above the 21 on the weekly chart. So I will, and also like Qs is at the previous swing lows. It's 592-ish level. So I won't expect a clean breakout, a clean uptrend, is serving like a clean uptrend or following the Thursday candle. Maybe there will be some chops around the 21 and 9 EMA for a few days, and we'll see the next direction. So I think the positions, my position would tell. If they stops me out, then maybe it's not the right time. Maybe we'll see further downside, or we need more time. Here comes the fade. Maybe a 100 on the hourly 9 EMA on AAOI could be a level to watch. Will I clear my long positions? I won't clear my positions, but maybe I will consider selling some into strength. A 50 EMA is just an EMA. Like it's not a wall or something. Like we would have a higher chance of getting rejected at the 50 EMA, but we'll also definitely get the chance of passing through it, like clearing it. And also depends on the will we see the improved market breadth or a shrinking of the leadership. Like a lot of factors would play the role. I would probably enter AOI if there will be a 5-minute breakout after this candle. Like it's on the 15-minute 9 EMA, previous swing high. Really tight stop. If it had been less than 2%, definitely. So there was this second entry, the second attempt on AOI today. We'll see. Oh, I really like the relative strength of crypto names today. Oh, I'm just using Excel to journal my trades. Like I built an Excel sheet back in 2021. Like I keep polishing it, like the formatting or something, but I'm using the same sheet since 2021. Like it's a really simple Excel sheet, nothing fancy. This is a really good question on YSS. So if you enter it at this day, like at around the high 21 level, or like the pullback on Thursday, this pullback entry is really nice at the high 22 level. Generally I don't sell into strength at the same day, and this is a stock in the probably the space sector. So it's one of the strongest sector right now. Like personally, I won't sell into strength on Thursday, but if you do, I don't think like it's definitely okay that you. I mean, selling to strength is definitely not anything wrong, and I think like different traders will have different risk appetite or personality, and like I would love to like catch a longer term move from this stock because it's only day one, or maybe you can say it's day three of this uptrend after this 50% pullback and this 2 month base. You are buying a flag, or you can also say inverse head and shoulders breakout, and you're also buying it right after a correction. How much is that? 10% correction. So my advice would be like I would hold it for a longer move and not selling into strength that early. But let's say if you're entering the exact stock, the exact chart, maybe back in October last year, then I would be more aggressive in selling into strength, like because the market has been going up for several months. But right now, I would recommend you to hold a larger position for a longer term move. But if you're feeling like uncomfortable on holding a large size, or like if you are holding a pretty huge unrealized gain, like you can definitely sell some. But and you can eventually like fine tune your how much you're gonna sell into strength, and like how early you're going to sell into strength. Like gradually maybe you gradually develop your ability to hold a larger position size. But it definitely takes time, and it's definitely okay to sell some into strength. Definitely. Yeah, and sometimes when you're selling some into strength, you'll gain some confidence. Like you gain more confidence, and you can maybe you have a lower chance of being shaken out if this one have a pulls back in the future. Like if it starts rejecting from this previous resistance, the swing highs here at the 30 around 30, it could like possibly pull back to the 9 or even the 21 EMA. So if you have sold some in the strength, then maybe you would like not being shakeouts and keep holding the position, and then caught a longer term move. The BNI is a really good looking chart. It's a really good looking chart, but it's too illiquid. You rarely see this type of a chart at a clean breakout on Thursday. If this stock is like trading at maybe more than 100 million daily dollar volume, or maybe have a larger market cap, this would be one of the best opportunities in the market. And this isn't also built an intraday too on Wednesday. You just cannot ask for more. This breakout is just textbook. War related sector. Yes, because like my current view on the market is on the long side, and I will simply avoid entering like the war related sector. But definitely, on Thursday this is a good entry. FRO. I think on Tuesday this pullback also a decent entry too. And no one can predict the future, and like maybe the FRO can going higher, but it just like kind of contradicts to my market view, and there are already a lot of opportunities like in other sectors of the market, and I just want to keep it simple. And it's definitely okay like to take the FRO. ARM is building a decent flag above the 9 EMA, could potentially setting up for a breakout. Hopefully also a breakout of this 2-year base. But the ARM would be one of the key stocks that I'm going to focus on in the coming days and weeks. Yes, I think lights on this Thursday pullback is also a great entry. You can easily manage the risk here. And it's on the 21 EMA previous gap. Probably the previous anchor VWAP swing high too. Yep. This SOLS is also looking pretty decent. Intel is really strong. Now it's at the previous unfilled gap. Have the potential of the next of the new leaders. Could be Could be. Yeah, AEHR is definitely one of the craziest stocks right now. The Thursday, like I think the opening range high entry or even this 5 minute candle breakout is okay, but it's moving too fast, and probably intraday is below the 9 and 21 EMA, so it's not easy to catch this one. How I became more of a pullback trader instead of a breakout one. I believe I started trade more breakouts or yeah last year. Like I think is last year. But the idea started I think in 2024. Like back then I have started to notice like the breakouts are working less effectively. It is easier to get shaken out when you're entering a breakout, and it's hard to get a tight entry, to get a tight stop when you try to enter a breakout. And more stocks are just bouncing off from the EMAs or the support levels quickly. Like they're not spending time around those support level. Like they're just a touch and go. And 2025 is like this is becoming more and more commonly seen. For example, last year, this CIN, since this earnings day, it's really hard to get a breakout entry. But I think yes, like if you're looking back, this day could be one, this day could be another one, this day could be another one. But GEV is definitely not a stock that favors the breakout entry since 2024. Maybe this one is a good one for the breakouts. But there are a lot of like a pullback type of entries, like maybe this day right here. And actually, like I think this day, at the same day of the breakout day, it also offers a pullback to the 9 EMA. And I'm not even zooming in for like some pullback entry that's not that looking good on the daily chart, and also not considering the general market, the sector strength, or the other stocks in the same sector as well. Yeah, this move in 2025 is definitely didn't provide much of a clean breakout entry. But I think you can see a lot of the potential pullback buys. Not sure this one could be one pullback to the previous high and also the previous low on the EP day. Yeah, this one is also on the hourly chart, hourly 9 EMA, previous bar high, like it just fills the gap and then found support, and then it pushes back up at the previous high level. The daily chart, you can see maybe this one could be a buy, this one could be a buy. I don't know too. I don't know. Like if we start trading 24 hours, we'll see how the market is going to change, and then we adapt. The market is always changing. When they gap down, I'm just going to take the loss. So that's why you're using a small risk per trade. Like when you're using 0.5% or even smaller risk per trade, then even they got they have a gap down, and you took maybe double or even triple the loss of your original one, then it's only like maybe 1% or 1.5% for the trade, and it's still manageable. So that's why like for my style, I do not recommend to use a high risk per trade, like more than 1%. If I had to start again in trading a 25K account, I'm just going to probably do the same. Maybe I'll focus a little bit more on the small caps, micro caps. But I don't quite recommend it. Like the small and micro caps are going to be the laggard from yes, they are going to be the laggard mostly in the most of the time. So you have to really pick the right market timing, the right market environment to trade them. So actually don't quite recommend like to focus on the small and micro cap. Yeah, so I'll probably just do the same. Like the account size actually doesn't matter. A small account actually gives you a lower spread, smaller slippage. 5K accounts, yes, I agree. If the account size is I would say maybe below 10K, it's really hard to to practice the position sizing. they really have maybe 25% positions, like 25% positions. Maybe you have to be more concentrated. Yeah, maybe for a smaller account, I would like trade less and really focus on the really good opportunities and size larger. Maybe take higher risk, like maybe 1 to 2% risk per trade, and pick the really good opportunities. But all in all, I don't think like it's going to deviate that much. If I'm trading a small account, I'm still going to look at the same stocks. I think the same entry, maybe a little bit more aggressive on the position sizing or the risk that I'm taking. But financially, the losses you can be easier. It is easier to make back the losses outside of trading, like you're from working in full-time job or a part-time job. Yeah, once I enter a trade, I just forget about it. Maybe it's not forget about it. It's just accepting the outcome of a trade. Like when if it stops me out, then I'm happy to take the loss and move on. If you're feeling uncomfortable, maybe you can reduce your risk per trade. Let's start with a smaller risk and then gradually increase to a optimal level that you are comfortable with. If like the position size is too small when you're taking a smaller risk, but you can practice it with a smaller position size and smaller risk first, and then gradually increase to a optimal level. Yeah, you need to accept the randomness of trading. The more you want to control the outcome, the harder the trading would be. I think in other aspects of life too, like the more you're trying to be certain on something, trying to control the outcome of something, then it will be more difficult. Like at least mentally, it will be more difficult. Just yeah, I love stoicism. Although I didn't like study really deep on that, but like I only have a brief understanding on it, and I totally agree with it. Yeah, for Dow, I'm trading it on the weekly. I'm trying to hold this one as long as I could. I think I raised the stop on Dow in the last week. Maybe yeah, I think it's safe like to raise the stop. I raised the stop to the week low of this of this bar right here. As the low is slightly below the 9 EMA on the weekly chart, and there is a the Dow is pretty far from the 9 EMA that I don't think a healthy pullback could like slide past this 9 EMA. So I think this level is a good level to set my stops. And now I'm just waiting for the 9 EMA on the weekly chart to continue grinding higher, and then I can raise my stop to the low of this week, below the low of this week. But definitely for Marvel, this one, if it is going to like if this phase if this phase after like maybe the late day today and tomorrow is starting to close below the 9 EMA, then probably I'm going to took it off. So in that case, I'm not going to wait for my stop to get hit. But no, I didn't take any profits on Dow, not yet. Also, AOI is now pushing back a bit. Nice action so far from the market too. And the market is holding up the opening range low. No, I don't like to trade intraday. AMD Thursday candle is a change of character. Weekly chart really nice close above all the EMAs. Now at the unfilled gap, it's facing some resistance here. Maybe a few days consolidation will be great. So I think the FPS is the next stock that I will try to get in. Really love this candle shakeout on the weekly chart. Now it's back above all the EMAs. So shaking out the weak hands and looks like it's ready to go. But I believe maybe we need the market to cooperate a bit. Like at least not losing the 9 EMA. According entries is at the 5-minute candle breakout yesterday. Marvel, my entries are also at the 5-minute candle breakout intraday. And then I raised the stop to break even now. So daily chart is pulling back to the 9 EMA on that day. The previous swing high also. I'm looking to short the metals. I mean maybe no. Yeah. Like the major reason is I'm pretty well positioned. Like my exposure is pretty high already in margin, and I would prefer a few weeks of consolidation, or even a few months. Maybe the battles can push a little bit higher to around 5,000, and then when they're starting to lose the 9 EMA again, this is the first breakdown from the 9 EMA and also the 21. If there will be a second one in the coming weeks and months, then I think it will be a better entry. So I think that's it for today. Thank you guys for coming, and we'll see you in the next one.